Hi guys, thanks for joining us today. So today we've invited a valuation expert, Pitsi Mnisi from Lynshpin Cedar. She's MD and founder. So Pitsi, thank you very much for taking the time up to meet with us. Can you just tell us a little bit about yourself and about your business?
Yes, good morning everyone. Good morning Charmel. So it's good to have a conversation with you. My name is Pitsi Mnisi. I'm the founder, as Charmel introduced me now, founder and managing director for Lynshpin Cedar. We in the consulting and the corporate finance space. We recently did a video on our business. It's on our LinkedIn page, so you can go check it out. Also check out the full video on our website. But effectively, we are in the M&A space where we do deal originations, due diligences, from limited due diligences to full scope due diligence, to give an example. And then in the consulting space, we in the feasibility study space, and also long-term business planning, and also post-implementation and investment reviews. But check our video on our page and also on our website for more information.
Thanks for that introduction, Pitsi. So, Pitsi, can you explain to us the different uses of valuations and how it fits into the small and medium business landscape?
Yes, no, thanks for that question, Charmel. There's so many other uses for valuations. I'll just touch on a couple of things. The list is not exhaustive, so there could be other reasons why you are doing a valuation. But what I'd just like, for the purposes of this call, just to touch on, for example, on the seller side, you could do a valuation because you on a capital raise, you're raising capital for expansion, your business is growing, or just to maintain your working capital. And then you can also, that's one example. And then the second example as well, from the seller side, you can raise capital because you're looking to exit the business. So effectively, you build the business to a point, and then now you want to exit. I'd just like to highlight there's certain entrepreneurs or founders that get excited by, you start things, you build them to a point, and then at some point you want to exit and do other things. So effectively now you do evaluation because you're gonna now go on a capital raise, looking for new owners for your business as well. And then the other one that I'd like to touch on, before I go on to the next one, when you are exiting the business, it's always important to have a clear view in mind why you're selling 100% of your, why you want to exit 100% from your business. Because this is for myself as a evaluator, as an investor, this is one of the questions that I always have at the back of my mind. If I come across a business where a person is leaving, saying I'm exiting 100%, the first question that comes across my mind is, why are you selling your business? Is there something that you know that are not? So it's always very important to be quite clear and precise, so that you send a very clear message why you're exiting. It's not, you don't create a nervous environment. So I just wanted to touch on that. The other one could just be to de-risk yourself. Sometimes you feel that you want to create personal liquidity. It could be that you feel that you invested a lot in your business, and then you want to diversify, and then you're looking to sell some portion of your business so you can create liquidity, and then look for other personal ventures. And then the other one on the business owner side, you can just do valuation for, when you do long-term business planning. That time when you do long-term business planning, just to track how your business is going, how far you have gone. So because when you do evaluation, it gives you an opportunity to review. You've had an idea, or you had and whatever mandate it is that or problem that you thought that you were addressing, that you were solving. Now you get to a point, you're like, okay, how am I performing in line with what I said that I'm going to perform? And also, what opportunities are there? This also gives you an opportunity to understand your market, understand your business. Is there certain things that you need to tweak here and there? What are your competitors doing? So it could just be for that particular reason that you're just evaluating, so you understand, so you can prep yourself better, and then you can either you are on the right track or you need to change certain things. And then the other one that I'd like to touch on is on the buyer side. If a buyer, for example, you are an investor or you are a business owner, you're looking to grow your business, and then you're looking for to consolidate the market. You can go and look for a business that you think that matches, you've got synergies with them, they can complement your business, and then in that instance, you need to do evaluation of the target company. Or you are an investor, you're just investing, you like investing into businesses, you come across a business that you like, and then you do an evaluation to understand whether or not it's something that you're interested in, that you like, you put your money into. And then your second question was saying that, how does it fit into a small business? Sometimes people can say, valuation is for, big business, medium-sized business. I'm a small business. I don't need to worry about it. So I have a different perspective. I say that you must always create something with a view that, you can scale up this business. So if you're creating a business where you're just creating, a business that's a very, very small business where you're maintaining your monthly expenses, that's something else. But where you're creating a business where you believe they scale up, you can scale up the business, you can grow the business. I think these are the things that you need to start thinking from the get-go, because that helps you to say that, how do you drive your business? How do you make sure that you get value in terms of what you're doing? And then I like that saying to say that, don't never underestimate where you are in the process. You must always have, once you set that vision, always walk in that, how do you make sure that you're walking in line of the initial plan that you drafted, the initial vision that you have. Unless you're doing the checks and the balances, you wouldn't know, are you still going into the right direction, or these things have blossomed, so I think it's very important. Always remember that saying that, a journey of 1,000 miles begins with just a simple step. The business that have been founded, some businesses, you start a business and then it just blossoms. Other ones is a journey where you organically you have to build in the processes, take on market bit by bit, until you get to a point where you have grown the business, irrespective whether you're small, you're medium. These are the things that you need to start thinking about, especially if you're all about growth, your business, you believe your business can grow to a point that can be attractive.
Thank you for that comprehensive response, Pitsi. And I think what you said is so important. We've got to remember that valuations is not just for the big businesses, and there's various applications for it. So Pitsi, so if you think of, so valuations is quite comprehensive and there's lots of inputs that goes into it. Yeah. So what is the benefit for business owners to understand what goes into a valuation model? And then how do you then take that and implement best practices within your valuation, within your business, so that when at some point or another you need the valuation, you've set up your business in such a manner that it is beneficial to you?
Yeah, I like that question, Charmel, because most of the time, or I mustn't say most of the time, sometimes, if you're a business owner, you always say, oh, that's for experts. As long as someone can come in and do a valuation for me, I'm comfortable, that's their space. I've got a different view to say that it's very important that you understand what goes into your valuation, because as a business owner, is a tool that, like initially in the beginning, remember we said that one of the valuation tools one of the reasons why you might be doing your valuation is understand where you are in the business when you're doing strategic planning. So it's very important to understand what goes into your valuation. That even though you're not an expert, if you hire an expert to come and do a valuation for your business, you should be able to stand back and say that, okay, what does this mean? What does that, but this doesn't make sense based on what I understand from my business perspective. If you're telling me this, I would expect to see this outcome. You need to be operating in that level to get the full benefit of it. And then from a valuation perspective, always remember that what you put in is what you get out. Valuation is made up of inputs that gives you the the output. So if you put in hojos into your valuations, you're going to get hojos out. So it's always very, very important that you understand what goes into your valuations. What is the key drivers of your valuations? Very important, because if you understand the key drivers, you can sort of look at evaluations. Does it make sense based on what I know? Oh, you don't need to be an Excel guru or valuation guru. You can look at the outcome, say, I know about this about my business, and then I'm expecting this outcome because I know about this output. What you're giving me doesn't really make sense. You need to be engaging on that level. And as well, when you stress test your, you need to know what happens to your valuation when you stress test your key inputs. When it comes stress testing is when you start doing sensitivities and scenarios and whatnot. So if you really don't understand what are you trying to achieve at the end of the day, you can just stress test anything. But when you understand your business, you understand what you're looking for, and then you can ask someone for, please run me this scenario, because you know what you're looking for. Please stress test this one. I want to see that if this performs in this way, how does that impact my valuation? And the other key thing is, with that, you can be, sometimes you need to do benchmarking, of your outputs or of your inputs. So if you don't know what you're looking for, and then how are you going to benchmark? I mean, fair enough, your expert is going to benchmark for you, but you still need to sit around the table with your expert, and then to discuss this thing that the expert has done for you, put for you on the table. So it's very, very important. Never say, that's just for the expert. Just do the valuation, give me the report, and then I'm going to go engage the banks. You ask about the best practice for your business. How do you prepare that? So always have the future in mind. So you're starting today, but there's going to be tomorrow. There's going to be next week. There's going to be next year. There's going to be, you know what I mean. So always have good governance into your business. Keep up to date financial records. Have a clear growth trajectory for your business. Can you imagine when 5 years you started a business, 8 years, in the 8th year of your business, now you're going to sell your business, your financial records are in disarray, governance is in disarray. It's going to be a nightmare to try to put together information to do a proper due diligence on that perspective. So, it helps you from all the other aspects of your business when you do good governance and keeping up-to-date financial records. But it's also very key because you have your ducks in your row.
So thank you so very much. No, that is fantastic. I absolutely 100% agree with you. And as small businesses, I think sometimes we tend to shy away from things that we don't understand. But it's so important that we understand all aspects of our business, and you don't need to be an expert in it, but you need to understand how at least the fundamentals work. So thank you so very much for sharing your wisdom with us. We appreciate it. And keep well. Thank you.
Thanks, Charmel. I really enjoyed this conversation. Keep well, hey?
Thanks. Bye-bye.
Cheers. Bye.